that's tasty. So it smells so good. I can taste it. Actually, could almost eat it. That is, well, I mean, I could if I wanted to, but then I'd have food in my mouth, and that wouldn't be very good, would it? Rocky Outcrop here, keeping things fresh for everybody. That is, of course, basil and cilantro. That's for my US friends out there. So thank you so much for joining me to take a look at the charts together. My name is Rocky Outcrop. We make daily videos here for Bitcoin, Ethereum, Chainlink, and Tezos. This is the Bitcoin video you're watching now, and I would really appreciate it if you hit that subscribe button and share the video with a friend, all that good stuff. We're looking at getting up to that last 100 on the run up to 1,000. How exciting! How exciting is that? That's so fantastic. Thank you to everybody for supporting the channel and helping it grow. Couple of little updates then as a result. Like channel updates, channel URL. You can see here I've written the channel URL out, youtube.com/RockyOutcrop. You can share that with your friends. Tell everybody, oh, there's this great guy on YouTube, and his URL is very easy to find. So like there we go, lovely jubbly. And also I've got a new flavor of juice. That's right, we're on the blackcurrant flavor now. So want to keep everybody fully informed, complete transparency here. I was drinking orange juice last week. This week, I'm mostly drinking blackcurrant juice. Okay, so cool. Moving on then, we're going to be taking a look at two things in today's episode. The technical analysis, starting off on the weekly, going down towards the lower time frames, and, you know, building up a picture along the way as we go, like we like to do on the channel at the moment. And another thing that we'll be looking at is inspired by a comment by Tanner. So we'll be taking a look at the stock to flow model that we have in Bitcoin, and just kind of having a little discussion about that, trigger a discussion for everybody else so you can all have your own input as well into that. So to introduce today's videos then, let's jump on over to the comments. Hello Peter, good comment here, thank you so much for that. Great video as always, sir. No, thank you, don't thank me, thank you. I saw a descending wedge on the stochastics daily time frame. Maybe we will have some sunshine soon. Well, thank you sir for your comment, that is very good of you, and actually, you know, good comment too. I've gone and drawn that on there, so we'll discuss that when we get down to the 24-hour time frame. Suppose, look, maybe we'll have some sunshine soon. Should balance that out by looking at TradeSpotting's comment. TradeSpotting, great guy, great video out yesterday. Check it out. It's about VeChain and explains all about it. You might be interested. He says, great video. Plants look like they're getting vitamin D, and BTC seems like it's about to get some vitamin D where the sun doesn't shine. So where is the sun going to shine? Explain this vitamin D. Is it going to be on a happy smiling Bitcoin face, or is it going to go up the Bitcoin bum? We'll have to take a look at the charts for that. But of course, for the second section in today's video from Tanner, loved the shout out yesterday, says Tanner. You're more than welcome, and shout out again to you today. You're the man. No, you're the man. You're the man. Take that back. Read an interesting article today on the stock to flow model being a farce. Curious what you think about that. Article linked here. Well, I've already opened that up here, got a few extra tabs open, so I thought I would do that then in today's episode. Another shout out, I suppose, can go out to Spidey Monkey, who thinks that I should maybe do a couple of different coins, you know, dedicated to different types of crypto tokens, talking about utility, currency, privacy, and platform. Great comment there, Spider Monkey. Just wanted to say thanks very much for that on camera, because, you know, that's great. Actually, as well, good videos today. Swickard, thank you so much. In fact, thank you to everybody. Thank you, everyone. Let's get into the charts, I suppose, or else we never will. Actually, yeah, let's get into the charts, or else we never will. Right, okay, cool. So, new flavor juice, done that. Will we ultimately just end up moving that bottom line? That's what I said in yesterday's video and whatnot, and in today's video, I've just gone ahead and done that, right? What I mean by that is this lower line here, the purple one, I've made it so it accommodates the most recent price action. Why? Well, if you look at the volume down below here, as you can see, that it's nothing inspiring at all in terms of like looking at this being a breakout. And if you jump over to the CME, the coronal mass ejection chart, this is where cosmologists buy and sell their cryptocurrencies. You can cosmologists are the guys that do horoscopes. So this is obviously a very forward-thinking chart. So looking at this, you can see that we're still in a symmetrical triangle over here. You know, great, la-di-da, let's move on with that. By the way, if you're wondering with the gap fill box, there was a gap on the hourly that got filled during the video when we were filming it, or just beforehand the other day, yada yada. Let's move on then back to the Bitcoin chart. So yeah, that's cool. Thought we'd move it. It's okay, accommodates that, fair enough. Now that does change things slightly as well for the lower time frames because that line is the same line, but it doesn't change things too much. This rising wedge here, which we've got in the background on the 24-hour time frame, and the falling wedge here, they're still just, you know, wedges and all the rest of it. But I suppose it's looking a little bit more channel-esque, having moved that line. They're not converging quite as clearly there in the background. But you know, you could probably change this around a bit anyway if you really wanted it to be more wedge-like. We could even just lower this side a little bit more, or whatever. It doesn't really matter. But we skipped a time frame there, so let's go to the two-day time frame. The key areas on this time frame that we're looking at, no divergence or anything there. I'll just hide the oscillators down below. They're pointless at the minute. Well, I mean, I say pointless, I might now have to justify that. We just went slightly oversold in the stochastics, came back up. That's good to see. Came down to the neutral area, came back up above it. That's kind of good to see, I suppose, because technically these areas could be considered to be oversold. Well, the oversold area could be, but but here, whenever you're being potentially in an uptrend, I've said this from time to time, neutral line could be considered to be like that. Whatever, we're not going to get too carried away. Like I say, so I can hide those now. And what we're looking at really in terms of this 2-day time frame is that we've come up here, we've touched off, and the prices now. Oh, great! It's good to see. Prices have been as high as 260. We're at 233 at the minute. That's interesting. That's something different. Sweet, awesome, cool. Something's been happening. Brilliant. So yeah, key areas then, of course, is 21 that we've just gone up and touched there at 9258. Awesome. And then, of course, the key areas either side of this, really, if you want to like look beyond the top of this descending wedge here, you know, that we have in the foreground or the most recent price action, then and you know, just kind of skipping this sort of idea of, you know, but what would be looking beyond that would be 9,700, just because this would be fake out territory here, and we could until we really get above the previous high, and of course, you know, the 9,550 area and whatnot as well, all in that area, and this weekly downward sloping trend line. So if you were to go up above all of that, you've got a lot of things in here which could, like, you know, cause you kind of to trip up along the way, and that's why 9,700 would be quite important. Of course, then, you know, the other targets up above, very much important thereafter, but they're all written out here in the white writing, whatever. So yeah, that's what we're looking at here. Interesting. Let's get on down to the 24-hour time frame. I'll bring this up here because, like Peter said, got this wedge here on the stochastics. I've drawn it in like that. As you can see, I'm just below the yellow line, just above the pink line. The way I've got them is that the K is the yellow line, the D is the pink line. As you can see there, of course, not going to go on talking about that whatsoever, actually, but as you can see, that's how that functions on here. And yeah, okay, so that's accurate. Pardon me. That would put the top of that line at the minute right at the neutral line here. I should really have horizontal on this. I want to have a horizontal line here. Forgive me as I put one on 50.66. That'll do. You never get 50 spot on. I'll move it a tiny wee bit. See what I mean? Was a waste of time. That'll be right at the I'll be right at the top of this falling wedge here on the stochastics if we were to get above the neutral line there for that one. Interesting enough. And yeah, we've got our one that we have had on this RSI for quite a while, but it's had its wee fake out there. Having a wee breakout from it now at the minute. Is it possibly or not? You know, or is this another fake out? I don't know. I've just moved this line. How about we have it there so that wasn't a fake out at all, and we're still inside it. That makes a bit more sense maybe. So cool. Two of them there, and a rise and a fallen wedge here in the current time frame. Wedgy wedge land. So if you're a wedge land lover of cheese, perhaps, then you could be looking towards that, like we spoke about on the 2-day time frame in terms of the upward movement. Same sort of dealio here, but the top line of it comes in at 9,470 or so, where the 50 simple moving averages. So if you're to move up beyond this area, then of course you've got your fake out zone, like we were talking about, up to the 9,700 easily enough, you know. And actually you could even extend that perhaps up even as high as this 9,850. But that would be a good enough measured move. You know, if you do this measured move thing, what you do can do it like this. You know, you go here, draw between there, then you go like this and you say lazy style, you just go, oh, 9,300, that's where we're going to. Then you kind of go back to the textbooks and you realize that you're supposed to have it like about 50 to 75% or something like that, and that would maybe bring you up to this 9,850 area. So we'd be asking questions, of course. Either way, we're still within the structure of the purple background pattern. Okay, not to be overlooked. Moving on with the price action down the way. Oh, just draw the distinction. This is the big time frame. Towards the downside, you're looking at that 888 number, of course, where the bottom of the descending triangle is on the 2-day here, and on the 1-day you've got this fallen wedge here, bottom area, and of course that 236 there of this Fibonacci, which is obviously the bigger term swing lows to highs from March to June. Right, great, good. Now this smaller time frame swing lows and highs, this is 11th of May to the 1st of June, is got 618 coming in down here at the bottom end of this, where we've already come down and gone at that golden pocket and gone up the way. And but we've got key areas, just to keep things nice and simple in this 12-hour time frame, 9555 and 9100 yet again, and we're right there at that 923, above the 236 at that 9226 level. As you can see, I was trying to say 9236, but actual Fibonacci retracement number comes in there at 9196, so 9200. The fact that we're above that currently is good to see. Plenty of time left in this 12 hours, though, another 10 hours to go. Going instead down to the 4-hour time frame and taking a look and seeing that we've had this bullish divergence here, and here. Since then, we've come up to this most recent area where the prices have, just recently here, or we've just potentially been putting in a higher high. But let's just see how this pans out. If it does do that, then it wouldn't be bearishly divergent here on the RSI, just in terms of this last little chunk. But of course, we're really looking in terms of highs and whatnot at that 9,700 area, as we spoke about before, which could easily be somewhere where the prices potentially turn around. You've got the median line here on the parallel channel coming in at 9,900, and of course the top end of this parallel channel is at 9,000 or 10,600, which is quite a way up there. If looking at here on the 24-hour, where's my purpley line? Then you can see that that's also up there at the sort of 10,400. Depends on where you look. So similar sort of dealio, like we say, looking at that wedge in the background and saying it's kind of like parallel channel type shape, but also is still wedgy, and does depend on where you draw this in at. And of course, like I said before, we could really just have this in a number of different ways, really depending on where we actually find certain areas like our local lows and whatnot. If the price does indeed come on down here even more, then maybe we'll be talking about something entirely different. So anyway, enough of that. I think that's going to more or less do things for the technical analysis. We take a look at the hourly chart just for the crack, because we've got 7 minutes 47 left on this one, so at least we can come back to this after we've looked at that article. That'll be a bit of fun. 11 minutes into this. Okay, so we're just putting in this high now at the minute, touching off the 200 simple, and we've got 233 there. It would be good to see us close there, and then afterwards, I suppose, quite likely that we put in a higher low. I suppose if we're going to continue this on, let's take a look and see if it's bearishly divergent. Just get a line out here so we can see that it isn't, just looking at this just at the minute. So we can see that that's all right. What do we have on the lower side of this? Well, if we're just looking from this up to here, then we have this. So this is a little bit of a rising wedgie type thing. So maybe we're not looking at breaking out of the bigger picture right now anyway in terms of this movement, and instead, maybe we'll see a little bit of a pullback in the next couple of hours just to accommodate this continuing to do what it's doing, and perhaps even ultimately not lead on to us making it outside of the shape here of the. I'll just change the one I drew in there so that it's only visible on the just less than 12. Less than 12. You know what just flicked through my head? I saw this red line up here above the box, and I just when I was slightly distracted trying to draw in 12, and I thought, oh no, the battery's running out. My subconscious was like, look, that's the battery warning. Gosh, damn Android, why phone with its battery indicator up there. I'll make it just so that it's only visible up until the 11 hours, so it's gone there. So yeah, so then ultimately then we'd still be in this shape. Let's try and keep an eye out for it. And in terms of this 12-hour time frame, we've obviously had this few sort of breakouts. As you can see, it really depends on what time frame you want to draw this in at, to just sort of accommodate the most amount of touches and whatever else. Maybe in the 24-hour it could have been like that, with or even like this, whatever, whatever. So that's enough, right? Cool, great, covered all that, done everything there. Okay, so here we go with the second half of the video, where we take a look at what this article was saying and everything else. Now I'm going to actually keep this really brief. I actually made a video there a minute ago, explained the whole thing, went into great detail about all sorts of different stuff, talking about where the stock to flow model originally came from in gold and why it's used and the actual basis for it, and so much stuff, in depth and really interesting, right? To me, okay, and possibly to a bunch of people out there. But not to, but it does. But I can answer your question much quicker than all of that. I can answer it. It's like, yeah, I agree. Mostly it's a farce. Yeah. What actually is misusing the term stock to flow. It's misusing that. It's just a misuse of what it's for. In really, really brief terms, stock to flow is essentially a way of saying that if the price of something will not be affected by its supply. and which is its value basis, because while we've got something which is precious, so to speak, suddenly having twice as much supply isn't going to just half the value of the thing, and having half as much supply isn't going to just double the value of the thing, which makes it a good use case for money, because that's what you want. That's the ideal for money, right? So that it doesn't necessarily change too much, and you're not just going to wake up tomorrow and have lost your entire kingdom to the farmer down the road who found a bucket full of gold in his back garden, because you've got tons of it. And so anyway, that's kind of that, really. I agree. I think the article missed some points. There was definitely some really interesting stuff in my other video, which I'm not going to publish, about which explained nuances about this. I tried to break the maths down as well, so that everybody out there would be able to explain this, like so every single person would be able to go out there and have their own opinion as well, and say, I actually understand this. Well, you know what? I was reading about this. I heard about this stock to flow thing because I saw it on Crypto. And I actually understand this. That's why I wanted to give people that takeaway. And then I realized, it's like, there's no point. Nobody wants. I found that entertaining. Don't think anybody else would. Maybe one or two of you would, right? And I'm sure there'll be a comment saying, I actually wouldn't mind seeing that. But in reality, no, not really worth it. Here's the article here that's written, and they're saying that somebody has done something that's wrong and whatever else. What do I think of it? Don't particularly care is what it boils down to. I don't particularly care about Strix Leviathan. I hate their name. I hate their I dislike their website here and their team. I hate all their faces. And I hate their disclaimers and everything as well. So whatever, who cares? Shop. What's in their shop though? Swag. They've got swag for Strix Leviathan. Interesting. So I could pretend I work there by buying a hoodie for $99, or put my cup of tea down on a coaster for $20. My word. Who care? Really, what do I care about? I don't care. The article, which is their opinion, great. Pardon me. Talks about what stock to flow is. It kind of misses the biggest point about stock to flow, where they talk basically about how the value of a currency in terms of what's to you, in your opinion, what would be a more valuable currency? Soil, right? Where I just say, I've got some soil, I'll trade you this soil for a cup of tea, or gold. You've heard in the past how salt was at one point really valuable, and that it actually was like one of the first exchanges, like currencies or whatever, and that kind of had a bit of a problem though, in that salt's that you can get salt. A bit of a problem there with that one, but it was really valuable for quite a while and actually worked for quite a while. But bit of a problem with that one. Gold, pretty good because it's worth loads, so it's worth going out and trying to find some. But there already is tons of it. We've had gold for millennia. Pretty good. Is it better than silver? Yeah, it's better than silver. Why is that? Because of the amount that we've got and the amount that you can get and everything else. How much of it's kind of lying around and whatever. Gold. There's more of it. It'd be better to use that on the whole basis that versus say using grains of rice, or using bottle caps like in Fallout, or using salt like they did back in the day for a wee while. That's kind of what it boils down to. That's what it's about. It isn't about predicting the future value of things. It's a bit of a mistake, that one. You can model Bitcoin value with scarcity. Like, really, what is he doing there? He's just co-opting things. Trying to make it like there's something new. There isn't really. If you were working with looking at stock to flow basis, because you were working at an investment bank and you were looking at that for gold just out of interest, curiosity one day, and you knew about Bitcoin, you might just try and sort of apply the same ideas to Bitcoin and say, well, we also can predict the future about the future supply of Bitcoin, but we can't do that with gold. We can't actually say there's going to be exactly this much in 10 years. We can't do that. We've never been able to do that. We don't say there's going to be exactly this much in 2045. On the 5th of March 2045, there's going to be this much. You can do that with Bitcoin. You can't do it with other things. It doesn't really work. It's not really like that. Who cares though, eh? Because it's just an anonymous guy on the internet trying to make a bit of a name for himself, and he's done well. You know, he's been invited onto shows where he's covered up his face and he's worn his merch hat. And then Strix Leviathan, they come along with their stupid name and their founders and their pictures on there, where you sign up to give them money so that they can use some robot to trade for you or do quantitative investment management. They've got a fund. How's their fund been doing? Let's go look at their fund on their super speedy website. Show me about your fund. Where's your fund? Oh, your fund on your website. Oh, I really want to invest in this fund. This is great. Show me some charts and stuff. Oh, let me click on Octopus. Their Octopus. Oh, they've got a proprietary trading platform. Well, that's great. Let me see your trading platform. Can I see it? Well, here's a picture. Demo fund. Oh, example limited partner there. That's a good one. Oh, Demon Fund Education. Demo. Where do I get access to it? Do I have to pay to get access to this thing?
Portfolio system and up-to-date live charting.
Up-to-date live charting. Wow, that's only available. Let's see. Was that
final component of Octopus we'll cover in this?
Up-to-date live charting though. Wait, you can get up-to-date live charting on Octopus, which is amazing. I wanted to know more about that.
An up-to-date live.
That's a trading view window.
Charting. Settlement and reporting is the final component of Octopus we'll cover in this demo.
Right.
All trades are tracked within Octopus for settlement post facto. Octopus supports net settlement, short orders, loans, and yield transactions. This data allows the investment manager to track fund exposure over time across long, short, and yield strategies, and even
Groovy, great. Well, it's all just marketing, buddy, and that's that. Anyway, going back to the video, because there's a song that I'll just put on here as we end up the video, just get the copyright claim again, Dabby Dozy. Anyway, I went and looked into Plan B and whatever else. I see he's got all this crap on his thing. I don't know the point of it. What does he get out of it? What do people that do this get out of it? They want to enlighten everybody about what the price of Bitcoin is going to be in the year 2035, and they use all these charts to do it and that. Who cares? Like, so there's a halving coming up or whatever. Who cares? You know, was it actually done anything so far? No, not really. We're still waiting to see the minor capitulation and whatnot. That could still absolutely happen. Talking about things like gold and silver, Bitcoin is the first scarce digital object the world's ever seen. It's scarce like silver and gold. It can be sent over the internet like silver and gold. Surely the digital scarcity has silver and gold, but how much? In this article, I quantify scarcity using stock to flow and use stock to flow model to Bitcoin's value based on this, how much it costs to, how much there's this thing, but how much does it cost to mine it? Does that matter? No, it doesn't matter. How much is the demand for it? That doesn't really matter. What about anything about how anything is actually valued in the world? No, none of that matters. There's just this stock to flow thing. That's the only thing that matters. And I've got a graph and it lines up and it lines up. And it's me, and I discovered it, it's me. Power laws are interesting because they reveal an underlying regularity in the properties of seemingly random complex systems. Complex systems usually have properties where changes between phenomena at different scales are independent of the scales we're looking at. The self-similar property underlies the power law relationships. You've said nothing so far, buddy. We see this in Bitcoin too. 2011, 2014, 2018 crashes look very similar. All have 80% dips, but on totally different scales, respectively $10,000 to $10,000. If you don't use log scales, you will not see it. Scale invariance and self-similarity has a link with fractals. In fact, parameter 3.3 in the power law function above is fractal dimension. For more information on fractals, see the famous length of constraint study. Pew! Brilliant. Who cares? And it's not even that good. It's not that well written or good. The model predicts a Bitcoin value of $1 trillion after the next halving in May 2020, which translates to a Bitcoin price of 55,000. Highlighted this bit. People ask me where all the money needed for 1 trillion Bitcoin value would come from, but they don't ask me. They ask my anonymous name out there because I keep my things separate. My answer: silver, gold, countries with negative interest rate, Europe, Japan, US, soon, countries with predatory governments, Venezuela, China, Iran, Turkey, etc., billionaires and millionaires hedging against quantities easing, and institutional investors discovering the best performing asset of the last 10 years. I answer questions with a string of memes and cliches too. That's how I answer all my questions. Give me a string of cliches and memes. Give me a string of cliches and memes too. Fitting a linear regression to the data confirms what can be seen with the naked eye. Wow! Therefore, science. Bum, bum, ba-dum, bum, science, science, dum, ba-dum, bum, appliance of science. Let's put an R in here as well, R2. Significance of F, 2.3 E17, p-value of slope 2.3 E minus 17. The likelihood is the relationship between SF and market value is caused by the chance is close to zero. Yeah, stock to flow and market value, so that there's a relationship between stock to flow and market value is caused the chance is close to zero. Of course, what shall we call that? Let's come up with the new name. I've got one, supply and demand. Oh no, don't call it that, don't call it that. Let's put a line on a chart with the graph. Anyway, yeah, I really should have tuned out a while ago. Fuck. What do I think of it? I don't give a crap, mate. Thanks for asking the question, though. I think it's highly interesting. I think everybody should have their own opinions about stuff. Go ahead, read all these articles. Scarce as gold. It can be transported over a communications channel. Nakamoto 2. Surely digital scarcity has value, but how much? In this article, quantify scarcity using stock to flow, and using stock to flow model Bitcoin's value. And we'll close that one, and we'll update it a year later, and we'll look at the stock to flow model that was published in 2019. Then we'll come back with a better one based on the non-spurious relationship between supply and demand. If you're not familiar with the S2F model, because supply and demand of a thing which has got predictable supply and demand in the future, which has had a price thing, whatever, I highly recommend reading the original article because it explains it all and all the terminology, and you'll need the terminology. That's the most important part. In this article, I solidify the basis of the current S2F model. Solidify it by removing time. Oh, wow, Gandalf. And adding other assets, silver and gold, to the model. I call this new model the even better BTC S2F cross asset FX model. Model enables valuation of different assets like gold and silver with one formula. That's right, it actually moisturizes conditions, it gets rid of dandruff, and it does gold and silver all in the one formula. Yeah. First, I'll describe the current concept of phase transitions because we don't use time anymore, and it introduces a new way of thinking about Bitcoin and S2F, and explains why F2FX model is important. Second, I will do some other crap. Phase transitions are important perspective in understanding this model. During phase transitions, things get totally different properties. That's right. I just said totally different properties in part of my academic article. Transitions are often discontinuous. Yeah, they're often discontinuous, these transitions. That's a sentence for you. Put that in your pocket and take it home and give it to your wife. 3 examples of phase transitions are water, US dollar, and the Bitcoin. Let's take a look at water. You may have heard of it before. It comes out your nose when you're crying. The classic example of the phase transitions of water, it sits in 4 different phases. Let's count them out. You've got solid, you've got light, you've got gas, which is like the sun, and you've got ionized, which is like an album by Tool, as you can see here. Let's see that album by Tool. That's called Lateralis. Lateralis by Tool. It's like that album by Lateralis by Tool. If we go images, then you can see, boom! This is the 4th phase of water. It is whenever you become a fully realized, an actual person with Buddhism and stuff. And then what you do is you go back over to the article again, and you look at that, and it's like it's true. So we know that. So we've got this. We've got this now. Now look at the US dollar, right? It had phase transitions as well in finance. For example, US dollar transitions from gold coin, right, to paper backed by gold, right, to paper backed by nothing, right. Which is 3 transitions, just like water. Just like water. Now, let's move on to the all-important one, having already proved those 2 important things. Bitcoin, the same is true. The same. Just like the water and the Bitcoin and the Tool album and the golden coin that started off. First off, it was really hard when you bit into it. Then you discovered it was actually a thin wrapping around a bit of chocolate, and then you ate it, and it went all over your face, right? Just after that bit came Bitcoin. And the same is true for Bitcoin. And you can see that you've got proof of concept, right? You've got payments, you've got e-gold, right? Which is basically like gold, but it's got a capital letter E in front of it. and you ping it across the internet to each other, and you can make all sorts of stuff out of it. It is the best, right? Let's call that after the first after the first halving, it's almost gold parity, right? Almost, so like 1 Bitcoin is like an ounce gold, like. And then you've got financial asset, which is like a word because people in the world like to do this, especially those who work in the institutional money at banking. They love to say about financial assets and make out like it's a thing because they're professionals. They know what they're doing. They love that. That's definitely in my experience a lot of that. Ran into a lot of that in the past. So after the second halving, $1 billion transactions per day milestone, legal clarity in Japan and Australia, futures markets at CME and backed. Boom, financial asset. It's financial asset. Bum, 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 now we have a model, just like because it went from liquid and then it turned into a tool album, and now we can put that on a chart with clusters. Yeah, clusters. They were banned, but then we brought them back to use. Anyway, these 4 clusters could indeed indicate phase transitions. Pal, let's put some circles on here. Bitcoin clusters! Exclamation mark, because we do them in academia. We put exclamation marks on our charts, and we use usernames like 100 trillion USD. Each of the 4 identified BTC clusters have very different S2F market value combinations that seem to be consistent with halvings and changing narratives. Boo! Like water, like the Tool album, like the US dollar, like the chocolate golden coin. We have Jan New Jersey and Ultimo December 2019 prices from TradingView, silver, tons, and market value, and gold, and tons, and market value, and we put these things on a chart, and we put the dots on there, and you can see that there's clusters of proof of concept payments equals financial asset, and this means that you should do something. And here's something I copied. It came from Excel, and I took the lines on the thing and I just pasted it in. It was amazing, and we can zoom in on it, and it's got loads of numbers on there, and all of these numbers, every single one of them is convincing in and of itself, and there's loads of them. So there's bags of it, and then you've got the translates into a break-even price of 288k. Boom, 20 to 24 of 288k. Let's just compare that to the original one. Super excited about comparing this to the original one. Should have ended this another 5 minutes ago, but oh yeah, modeling Bitcoin scarcity. Where is it though on this thing? Bitcoin Blue, the monthly, no, scarcity value. Wait, where's the time aspect on this? Oh yeah, this one, 2020. Oh, fuck, doesn't go on. We needed a new graph. I mean, this is up here at 100 grand in 2020. 100 grand in 2020, 288 grand in 2024. Damn, 288 grand in 2024, but I can't see it on the other one. Conclusion. It's solidified, just like water when it turns into tool albums. The concept of S2F model by removing time and adding other assets. See, if you take out time and you put in gold instead of time, then you get the BTC S2F FX model, and it enables, for the very first time, the valuation of different assets like silver and gold and Bitcoin with one formula. That's one formula you can use. And the formula is market value equals something times 56. In fact, let's try and actually read it and see if he has any. I know, so we'll mix it real. Can anybody be bothered doing this? What's the current market value of gold? Looking up and actually seeing what its current stock is and what its flow is, the market value of that, and seeing if his maths is right. Let me know in the comments down below if you can be bothered doing the maths on this one. I can't. I'm going on to do the other videos today. Thanks so much for tuning in. Really appreciate it. Let's move on with the other videos. Indeed, right. Get rid of this album off here. I got super bored there. Used up all my energy on that video, and maybe definitely shouldn't have. Okay, has this closed out yet? Though it has indeed. 4 hours, no, 28 minutes left. Damn it. But we're up there. Suppose we could come back and look at that some other time. Thanks very much for tuning in. I'm going to go on to the other coins, starting off with Ethereum.